Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 24 hours, the US dollar, which measures the greenback strength against a basket of 6 major currencies, has managed to recapture further momentum and driving through 96 and on towards the highs around 96, 30, 40 area. This has seen the euro actually drop away from the resistance area, which is seen around 113.5. And from there, the indicator, which is the RSI, has broken down somewhat. The euro is weighted at 57.6 against the US dollar. And from the weighting, you can see that the market potentially still holds to its broader picture, which is somewhere close to around 111.1030 area. Although from a weekly time frame, there was somewhat some bullish candles here. There's been lack of momentum with the RSI still remaining quite heavy. And looking from the broader in towards the more shorter term, you can see that the market is still on its journey, that is towards the south side. And let's see if the market can eventually claim its region of 111.30.50 or around that lows, and then see if we can get a bounce. While the Australian dollar has also broken down. You can see the channel that hit the lows around 69 to 50.80 area, and then from there we can see that the market jumped up towards the top side, which was a cap around 71.70. We didn't get a relatively strong close there, and after the last 4 days the market's finally breaking away. Now, to support a further downside case, we do need to see a close under 70.90. We did get to 89 today. Now, a close underneath 90 should reinstate the downside to a potential target of 69 cents, which I'm in favor of due to the technicals are breaking down and the very weak signal that we've got here in terms of a bull case from the MACD has really, from the point of view from where or how we're set up, is that I do anticipate further weakness, but we do need to see a close under 70.90 to support that call. The dollar yen still trading in a lackluster price action and edging slowly or crawling to that top side of a target around 114, which I do anticipate an ambush, and therefore look towards the downside eventually. Reason why I think we've got further upside gains in the short term is the RSI has reinstated this positive signal, and the MACD is attempting to join that, but not quite there yet. Nevertheless, I think it will give us opportunity for the bears to return and look back towards 112.65. Sterling, well, since the bullish divergence kicked in, the market has lost its momentum, but still, the divergence is still there in both indicators, and therefore, as long as we maintain above 131.5, I still feel the view is to the upside. All eyes to the Bank of England this week, and along with the euro, and also with the US starting its 2-day meeting to announce its rate decision Wednesday and Thursday Sydney morning time. Along with that, also Bank of Japan's this week, and also we do have the Swiss National Bank. So we've got 5 central banks all announcing their rate decisions for this and last time for 2021. So no doubt it will be a busy time this week. But nevertheless, let's keep an eye on the pound and also keep an eye on the Bank of England's rate statement, because it could be a little bit hawkish. CAD yen still breaking down and still preferred from that rejection, and also the long-legged doji looks towards 87.20.30 and then reassess from there. So there's still a bit more room to see a further slide. Gold is still idle and it's sitting comfortably as it awaits the US Federal Reserve rate decision and see what the outcome is. We'll keep an eye on what the statement really holds to, more hawkish or more dovish. There is much talk that there will be a few cuts by mid next year, so let's see how the market plays out. Wrapping up with oil, well, the market since the outside range day continues to hold to a bearish case, with the RSI dropping nearly through the midway point, does support a further negative case. We do need to see a close under 70.80. We've contested that level, but we haven't broke it yet. But a close under there should reinstate the downside to about $64 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.